maybe evening. Right now it is good morning too. I'm recording this lecture early in the morning. It's early morning, 7:33 a.m. That's great. Let's just start. Question number 9 from the property income. We have discussed for individuals, basically property income is taxable on cash basis until unless if it is mentioned in the question accrual basis, then obviously we'll go for accrual basis. Otherwise, it is always the default category is cash basis. Cash basis means within the relevant tax year, if you have received the rent and you have to pay the tax, within the relevant tax year, you have incurred the expenditure, you have paid the cost, only then you can deduct the cost from the rent received. So let's try this question. Question 9 gives, it is possible in your book, maybe a question number could be different, but no need to get confused with that. Until unless you have the same question, number does not matter. Okay, let's try this question. What it says, calculate GIL's property income for the tax year 21-22, assuming that applies cash basis method of assessment. Let me clear myself again. In exam, nothing is mentioned, always it is cash basis. For accrual, examiner will have to write accrual basis for individuals. When it comes to companies, companies always apply accrual basis for property income. So we are solving this question in part A by using cash basis, then in part B we are going to follow accrual basis. So that you should be having a really clear idea of what is the difference between cash basis and accrual basis. Part A on cash basis. Gil's own a cottage which he lets out furnished at an annual rate of 3,600 payable on 6th of each month. Okay. During the tax year 21-22, he incurs the following expenditure. 1st May 2021, cost of a new garage. This cost of a new garage is a capital expenditure. While calculating property income, we cannot deduct capital expenditures. It is an improvement. Cost of a new garage. So simply, cost of a new garage is a capital expenditure. You cannot deduct this while calculating property income. The second is on 1st June 2021, insurance for the year from 5th July 2021. Now listen and listen carefully. GIL has paid insurance, property insurance on 1st June 2021, which is for the year and and that year will start from 5th April 2021. So actually, he has paid the insurance. He paid insurance on 1st June 2021 for 5th July 2021 till 30th June 2022. GIL has paid the insurance on 1st June 2021 for the year ended, which will start from 5th July 2021 and ends at 30th June 2022. But since we are solving right now on cash basis, and this payment date actually falls in the tax year 21-22, so we are not supposed to time apportion this 480. In cash basis, if the allowable expenditure which has been paid falls in the relevant tax year for which we are working, then entire amount is deductible. So in cash basis, 480 will be deducted from the rent received. We are not supposed to time apportion this. First number 2021, replacement freezer 380. Okay. Replacement furniture relief is allowed on replacement basis and it is written replacement freezer. We just need to find out one thing. If there is any scrap value of the old freezer available, then from this 380, I am going to deduct scrap value of the old freezer. If we do not have any scrap value of the old freezer, then entire 380 will be deducted from the property income, and this 380 is your replacement furniture relief. 1st December 2021, new kitchen table. You cannot deduct this new kitchen table, either you are following cash basis or accrual basis. Why? Because replacement furniture relief is not available on initial cost. Replacement furniture relief is not available when you are buying first time the furniture item. So it is categorically written new kitchen table. We cannot deduct this 200. March 22, there is a redecoration cost which is allowable, no doubt about it. Now let's read more information. The tenant was late in paying the rent of March. Gill received the rent on 6th April 2022. Now listen and listen carefully. The last month rent was paid on 6th April 2022, and the date of 6th April 2022 actually falls in the tax year 22-23. And right now we are just working for tax year 21-22. So the last rent of March was not received in March, it was received on 6th April 2022. Since it was not received within the relevant tax year, so I'm not going to take the last month rent. So instead of taking the rent received for 12 months, we will take only 11 months. Because, let me repeat, March 2022 rent was received on 6 April 2022, and the date 6 April 2022 does not fall in the relevant tax year for which we are solving the question. So that is why instead of 12 we have to work on 11 months rent actually we have received within the relevant tax year. Okay. Insurance paid 5th July 2022 was 420. On 1st June 2020, Gill has paid the insurance, which is for the year 5th July 2022 and ends at 30th June 2021. A very important point, since the payment date is 1st June 2022, which falls in the tax year 2021. Not relevant for us when we are working on cash basis, because 1st June 2020 does not fall in the relevant tax year 21-22. Redecoration costs was incurred on this date were not paid until this 1st May 2022 falls in the tax year 22-23. Even though redecoration cost was incurred, it was accrued on 1st March 2022, but it was not paid within the relevant tax year. And we are right now solving the question by using cash basis. Cash basis means only we have to take rent received within the relevant tax year and expenses which were actually paid. Number one, they are allowable. Second, they are paid within the relevant tax year. Only those expenditure will be taken. So since the redecoration cost is an allowable cost, but the point is it was not paid within the relevant tax year 21-22, that is why redecoration cost will not be deducted while we are solving on cash basis. So I believe now you can attempt this question. So where should I solve this question? Okay, let's go over here. Oh my god, how much? Okay, let's try here. Whatever is the number, we're solving question Gill's part A, cash basis. We will take only rent which we have received. We have not received the rent for the entire year. We have received only the rent of 11 months. Out of 12, it is going to be 3,300 pounds. Insurance paid within the relevant tax year will be deducted. Insurance paid on 1st June 2021 is 480. Replacement freezer, replacement furniture relief, replacement freezer 380. So very simple answer, we'll be getting it. Here comes your property income. So from 3300 we need to deduct 480, then 380, you will get 2440. you will get 2,440. That's simply great. Now let's read the question for accrual basis. Now we are solving this question on accrual basis. The first difference is going to be of rent. Even though the last month rent of March 22 was not received, in March 22 it was received actually on 6th April 2022. But since we are working on accrual basis, so when it comes to rent, we have to take the rent of entire 12 months. Even the last month rent was received little bit late. Even it was received little bit late, no issue at all, but it was accrued. So we have to work on rent receivable. So the entire year, the entire amount of 12 months we have to take. Let me repeat, even though the March rent was received on 6th April, but it was accrued in March, so we have to take it. So number one difference is going to be when I'm working on accrual basis, rent is going to be 3,600. Second, of course, cost of the new garage I will not consider. It is a capital expenditure. Third, a very important point is relating to insurance. On accrual basis, we have to take insurance which falls in the relevant tax year, and on accrual basis we have to time apportion the insurance as well if it is needed. So let me explain now. Look at this point number 2. Insurance was paid on 1st June 22, but it was for the period 5th July 2022 till 30th June 2021. Okay. The amount is 420. Now let me explain this. Point number 2 over here. Actually, we are solving this question for the relevant tax year, which starts from 6th April 2021, ends at 5th April 2022. Now listen and listen carefully. Look at this point number 2. Insurance was paid on June 2020, but it was for the period 5th July 2020 till it goes 30th June 2021. So look at this. Can I say insurance which is for 12 months 420? This 420 actually covers the period from 5th July 2020 till 30th June 2021. I need to just see how many months are of this insurance period falls in the relevant tax year 21-22. So 3 months actually. 3 months of this insurance falls in the relevant tax year 21-22. How? Look at this. Obviously April 21, May 21 and June 21 falls in the relevant tax year. And the next insurance was for the period 5th July 2021 till 30th June 2022. Amount of the insurance this time it was how much? 380? No, it was 480. It was 480. And from this period, 9 months actually falls in the relevant tax year. So from 480, I have to take 9 upon 12. From 420, I have to take 3 by 12. Now actually what are we doing? We are just checking how many months of the insurance they fall in the relevant tax year 21-22. Because on accrual basis, you have to time apportion the expenditure when it is for a longer period of time. Then finally, redecoration cost was incurred on 1st March 2022. Actually, the redecoration cost is a revenue expenditure, number 1. Number 2, it is allowable. Number 3, it was incurred on 1st March 22, which means it was accrued on 1st March 2022. Even though it was not paid in on March 22, it was paid after the year end. But since March 22 falls in the relevant tax year 21-22. So on accrual basis, entire 750 will be deducted even though it was not paid, but it was accrued. So now let's solve this question on accrual basis. Let's see what are we getting. Let's try. So let's try this question gives on accrual basis. The first difference is we have to work on rent receivable. Okay. That is 3,600. A very important point is insurance. We have to time apportion the insurance. From this 420, as I discussed earlier, we have to take 3 months, and from 480 we have to take 9 months. The replacement furniture relief is same. So replacement freezer. Now we have to deduct the redecoration cost as well, because redecoration cost is an allowable expense. It is a revenue expenditure, and it is accrued. Last time in cash basis we did not deduct it because redecoration cost is accrued, but it's not paid within the relevant tax year. Since we are working on accrual basis, now we have to take the redecoration cost as well. Redecoration cost is 750. So you just need to use your calculator. You will get property income 2005. So I strongly believe now you should be having a really good idea what is the difference on cash basis and accrual basis. As I mentioned many times, the default category for us is cash basis. Now let me discuss one more concept. What is the concept? Let me discuss the concept of head lease and sublease. What do you mean by head lease and sublease? For example, Mr. A has given his property on lease to Mr. B. Let's assume we have lease term 40 years. Mr. A has received premium, let's say 50,000. Now what happened after maybe 1 or 2 years? Mr. B, what he did? Mr. B sublets this property to Mr. C. Now lease term we have, let's say 25 years. This time Mr. B is receiving the premium. Let's say Mr. B has received the premium 40,000. And the requirement is we need to calculate taxable premium for Mr. B. We need to calculate taxable premium for Mr. B. Now listen and listen carefully. What is happening? First, Mr. A gives property to B, and this lease is actually head lease. This is head lease. And then Mr. B has given the same property to C. This is sublease. An examiner is asking us to calculate taxable premium for Mr. B. Okay, let's try. Very simple. You just need to focus on Mr. B. Mr. B has received the premium of 40,000. From this 40, just deduct relief amount. less relief, which is 2% n minus 1. The lease is 25 minus 1 into premium amount. So let me use my calculator. Okay. It is 19,200. Now listen carefully. What is happening actually? Mr. B is the one who has actually paid the premium on the same property and he has received the premium as well. Look at this premium. 50,000 premium was actually received by Mr. A and it was paid by Mr. B. So on head lease, Mr. B has paid the premium. And on sub-lease, Mr. B has received the premium. According to HMRC, when an individual has paid the premium on head lease and received the premium on sub-lease, in that case, this individual gets an additional relief on head lease. So Mr. B is the one who has paid the premium as well as received the premium on the same property, so he is going to get the relief on head lease as well. And that relief will reduce his taxable premium less. Relief on head lease. Working one. Now the question is how to calculate relief on head lease. Let me show working one. We are working for head lease. Premium in head lease was 50,000. Let us simply deduct the relief. 2% n minus 1. Head lease time period was for 40 years into 50,000. Which means what? So we are getting a taxable premium. We're getting taxable premium on head lease 11,000. What do you have to do? You have to take taxable premium on head lease, multiply this with the time period of sublease and divide this with the time period of head lease. Repeat. How to calculate relief on head lease? First you have to calculate taxable premium on head lease and then just multiply that with the time period of sublease and divide that with the time period of head lease. So let me use my calculator. 11,025 is, I'm getting 6875. I'm getting 6875. So from 40,000 we need to deduct 19,200 minus 6875. So here comes the answer, 13,925. So taxable premium for Mr. B is 13,925. Taxable premium for Mr. B is 13,925. Taxable premium for Mr. B is 13,925. So let's come here. Okay, I want you to attempt this question, pause the video and then obviously solve and then you can unpause the video. Mr. X sublet his property at a premium of 36,000 for 12 years. He has originally acquired property for 30 years at a premium of 93,000. We need to calculate taxable premium for Mr. X. Mr. X. He received the premium. He received the premium 36,000. From this we need to deduct relief, which is 2% n minus 1 into premium amount. 7920. We need to deduct relief on head lease as well. Relief on head lease. How to calculate relief on head lease? Look at the premium which is in head lease. It's 93,000. Just write 93,000. Deduct the relief from this 93,000. 2%. N minus 1 into 93,000. It is 53,940. From 93,000 you need to deduct 53,940. You will be getting 39,060. So here I have to write 39,060, multiply this with the sublease which is 12, divide this with head lease time period which is 30. So 39060 multiplied by 12 divided by 30, it gives me 15624. So from 36,000 I need to deduct 7920 minus 15624. Let me check again. 36,000 minus 7924 minus 15624. So I'm getting 12,456. 36,000 this. Yes. So taxable premium for Mr. X is 12,456. I strongly believe that you also are having the same answer. Mr. X taxable premium is 12,456. Now let's move ahead. Let's talk about another new concept. The name of the concept is rent-a-room relief. Now what is this rent-a-room relief? It is possible that owner and his family is living in the property and they have given just one room on rent. If someone is given a room on rent, then that landlord gets rent-a-room relief also. Rent-a-room relief is 7,500. So whatever rent you are receiving from the room which you have given on rent, you can deduct relief 7,500. But if you are not deducting relief, then you can deduct actual expenses relating to that room. Logically, you should be deducting rent-a-room relief or actual expenses, whichever is higher, from the rent received from the room, because you can have only one thing. Either you can deduct rent-a-room relief or actual expenses. So logically we say go for higher off. What do you mean by this? Look at this question 11, so that you should be having a really good idea. Mr. N rented a room from his personal residence at a rent 800 per month. 800 into 12 gives me 9,600. Okay. So the rent which I am receiving from this room is 9,600. Actual expenses relating to the property was water tax 30 per month. So 30 into 12 gives me 360. Now we have two options. Either to deduct 360 from 9,600 and whatever comes pay tax of that amount, or second deduct the rent-a-room relief. So obviously rent-a-room relief or actual expenses, whichever is higher, I'll go for that. So instead of deducting 360 from 9,600, we will deduct rent-a-room relief, which is 7,500. In this way, obviously, we'll be saving the tax. So simply, rent-a-room relief for actual expenses relating to that room, whichever is higher, you will claim that. So in question number 11, rent is 9,600 and you will be deducting rent-a-room relief. $9,600 minus this. So taxable amount is 2100. Now let me tell you one more concept. For example, rent from room is 6,000. Okay. And let's say actual expenses relating to that room, they are 7,000. Assuming if you come across a situation where rent from room is lower than actual expenses in that room, then what to do? Now listen and listen carefully. Rent is 6,000. If we take rent a room relief, $7,500. So I have to write 0. Why? Because rent a room relief cannot rent a room relief cannot result in loss. You cannot write negative 1,500. So if your rent a room relief is more than the rent which you have received, so simply you have to write 0. You cannot write negative value because relief cannot result in loss. But rent is 6,000. Now instead of claiming rent a room relief, if someone goes for actual expenses, now there is going to be loss of 1,000. So listen and listen carefully. If actual expenses are more than rent from room, then we will not go for rent a room relief, we will go for actual expenses. Because the benefit is, if actual expenses are more than the rent we have received from the room, then there is going to be loss. And if obviously the loss comes in the property, we will save tax from that loss. How we are going to save tax? We will study later on this, inshallah, don't worry. But you need to remember, whenever actual expenses are more than rent a room relief, more than rent received from the room, then we deduct actual expenses, then we don't go for rent a room relief. If actual expenses are more than rent from room, then claim actual expenses, not rent a. You don't need to claim rent a room relief when your actual expenses are more than the rent which you have received. Okay. Now one more concept. Actually, this rent a room relief 7,500. It was same in the Finance Act 2020. Before that also, uh, but right now it is 7,500. So in Finance Act 2020 and Finance Act 2021, rent a room relief is same, which is 7,500. Now listen. Actually, this rent a room relief is 7,500. It is per tax year. Rent a room relief 7,500 is actually per tax year. It is not per room. For example, if someone has given 3 rooms in his property on rent, so he will not be getting 7,500 multiplied by 3. That individual get only one rent a room relief. Second, if it is the jointly owned property by husband and wife, in that case, rent a room relief will be split 50-50. Each one of them will get rent a room relief of 3,750. They will not be getting separately 7,500. Repeat. If the property is jointly owned property by husband and wife, in that case, husband and wife both will get rent a room relief 3,750. Okay, now let's go for another new concept. What is that? The concept is of real estate investment trust. What is the name? Real estate investment trust. Actually, what do they do? Real estate investment trust, what it does, it collects obviously funds from general public people, and then they invest in property, and then they give that property on rent, and sometimes they sell the property as well. So if you are a shareholder of real estate investment trust, whatever dividend you are receiving, that dividend will not be treated as dividend. That dividend will be treated as property income, non-saving income. And secondly, whatever you have received from real estate investment trust, it will be treated as 80% because 20% tax is already paid at source. And while solving the question, you have to gross it up. How do we gross? Multiply by 100 and divide by 80. Let me explain what I want to say. What is this real estate investment trust? An organization collects finance from general public and invests in properties let out on rental income and capital gain. Actually, every individual cannot buy properties. So obviously, the way back, this idea might have come in the mind of a few individuals. So they created real estate investment trust. So you cannot buy the property individually, but you can do one thing. You can buy the shares of real estate investment trust. And real estate investment trust, what it does, it takes money from number of shareholders and then they invest in properties. Why do people invest? Reasons: they have expert management, risk diversification, there will be many investors. Pooling of fund is easily for real estate investment trust. Now let me explain what is the tax treatment of receiving dividend income from real estate investment trust. Number one, whatever dividend you are receiving from real estate investment trust, it will be 80% because 20% is already deducted at source. But while solving the question, you have to gross it up by multiplying by 100 and divide by 80. For example, you have received 10,000 dividend from real estate investment trust. So I have to gross it up 100 by multiply by 100 divided by 80. Look at this. Advanced tax will be available as tax credit. Real estate investment trust dividend income from real estate investment trust is like property income, non-saving income. So whatever dividend you are getting from real estate investment trust, it will be treated as dividend income. Number one. Number two, 20% is deducted at source. While solving the question, you have to gross it up, and when we will be calculating the final liability, before final liability, whatever tax we have paid in advance, that will be deducted. Let me explain this through a question. Question number 12. So that you should be having a really good idea what actually I really want to say. Otherwise, some of the students, they just get here and there. Trading income is 23,000. Interest income is 19,000. Real estate investment trust is 12. Number one, whatever dividend we are receiving from real estate investment trust, this dividend will be treated as non-saving income, property income. Number two, 20% tax is already deducted at source. It means this 12,000 is net 80%. So we have to gross it up, multiply this with 100 and divide by 80. It results in, I believe, 15,000. Second, so dividend from real estate investment trust is treated as property income, non-saving income, and 20% is deducted at source. So we have to gross it up by multiply with 100 and divide by 80. Dividend income is 5,000. Obviously, this 5 is 5. So we have trading income, interest income. Question number 12. Trading income, trading income. We have trading income. 23,000. We have interest income. So dividend from real estate investment trust is treated as non-saving income. We need to gross it up. Real estate investment trust. If we gross up this 12,000, so we'll get 15,000. And we have dividend income of 5,000. Okay. So 23,000 plus 15, it is 38,000. Okay, let's deduct personal loans. 12570. We'll have taxable income. From this 38,000, let me deduct 12570. So I'm getting 25,430. Let me check all is correct or not. So we are at taxable income. Let's try to calculate income tax liability. Obviously, 25,430 of taxable income of non-saving. Entire amount falls in basic rate band, with the tax rate is 20%. Basic rate non-saving 25,413 to 20%. Let's check what we get. We're getting 5,086. Now we have interest income of 19,000, but we need to check for the nil rate band. Look at this, 49,430. By looking at 49,430, we can say this individual is a high rate taxpayer. Whoever is a high rate taxpayer, that individual gets nil rate band of 500. So there is a nil rate band of 500. Nil rate band. Saving income 500 into 0% is obviously 0. Now we need to see how much space is left in basic rate band. The limit of the basic rate band is 37,700. From this 37,700, we need to deduct 2530. We need to deduct 500. Let's see how much space is left. We still have 11,770 space in basic rate band. Now we have saving income. Mm, 2354. Interest income amount is 19,000. From this 19, we have tax 500 and 11770. From 19,000, we need to deduct 500, then 11770. So I'm getting 6,730. After deducting 500 and 11770 from 19,000, we will get 6,730, and that amount now actually falls in high rate band because basic rate band is over. So we have taxed this saving income 19,000. Now we need to move towards dividend income 5,000. Every individual gets nil rate band of 2,000. So out of 5, 2000 actually falls in nil rate band, so remaining 3000 they fall in high rate band. So let's check what is the amount of income tax liability. 5086 plus 2354 plus 2692 plus 975. So it is 11107. Okay, from this income tax liability, we have to deduct the tax credit. Simply, we have to deduct the tax which we have already paid in advance. From real estate investment trust, actually we received 12,000, but while solving the question, instead of 12, we took 15. We gross it up. So the difference of 15,000 and 12, which is 3,000, we have already paid in advance as tax. So let's deduct tax credit. 15,000 into 20% is 3,000. So tax credit means simply the tax which you have already paid in advance. Just deduct that. So we are getting 8,107. So dear student, the tax payable is 8,107. So now you should be having a really good idea of this real estate investment trust. Now let's move to another topic. This is okay. Furnished holiday accommodation. Now in property income, we are just discussing this furnished holiday accommodation, what it is. Now we need to discuss the last concept of property income, that is furnished holiday accommodation. In furnished holiday accommodation, dear student, you need to know two things. Number one, what do you mean by furnished holiday accommodation? What are the conditions? And if the property is declared as furnished holiday accommodation, then what benefit you will be getting? What is furnished holiday accommodation? What are the conditions? If conditions are met, then what benefit landlord is going to get due to this furnished holiday accommodation? And some of the points of furnished holiday accommodation you may not be able to understand right now, because we will be studying other topics. Then you will be able to understand few points. Profit arising from the commercial letting, furnished holiday letting are assessable as property income, but treated as separate. Profit arose from a separate business trade, treated as earned income, not investment income. Again, furnished holiday letting, cash basis is the default category. If gross income from furnished holiday accommodation is more than 150, then you follow accrual basis. Now, number one is furnished holiday accommodation. The first thing which you need to understand is the accommodation must be a holiday accommodation, which means that it should be on a tourist. It must be on a tourist spot. Okay, then obviously we'll say it's a holiday accommodation. All of the following conditions must be met for a letting to qualify for furnished holiday letting. The letting must be furnished accommodation made on commercial basis. It must be furnished. Each and everything should be available. Second, the accommodation must be available for letting to the public generally for at least 210 days. Let's say you are supposed to give ads. There should be advertisement that at least 210 days that property is available for letting. The accommodation must be let to public generally for at least 105 days during the tax year. It means if I take 50% of this, it is 105. So around 210 days, you need to do marketing advertisement that property is available for letting, and at least 105 actual the property was given on letting as well. During their accommodation must not be let to the same person for long term. That is 31 days or more. You're not supposed to give the property to a same person for 31 days or more. If there are long-term occupation, then it must not total 155 days in a year. Now there is a bit confusion. What is that bit confusion? Uh, First, I told you you are not supposed to give the accommodation on long-term basis to same individual, and the long-term means 31 days or more. But then another point says if there are long-term occupation, then it should not exceed 155 days. So what do you mean by this 155 days? Let me clear this point. For example, I have given property to Mr. A for 40 days. So that is long-term occupation, yes. Mr. C, I have given property for 35 days. Mr. D, I have given property 32 days. Mr. E, I have given property for 20 days. 20 days is not long-term occupants. Let's say three individuals, Mr. A, C, and D, I have given them property for more than 31 days. So what to do? You have to take out total of these three long-term occupants. Let me calculate 40 plus 35 plus 32. The total is 107. So you have to make sure if you have given the property for long-term occupations, then the total of the long-term occupation must not exceed 155 days. Because if the total exceed 155 days, then accommodation will not be a furnished holiday accommodation. And if accommodation is not going to be a furnished holiday accommodation, then you will not be getting benefits associated with furnished holiday accommodation. So why do we have so many conditions in furnished holiday accommodation? Because you have benefits associated with furnished holiday accommodation. Now the question is what benefit we are getting. So let's see what are the benefits of furnished holiday letting. If a letting is classified as furnished holiday letting, then following reliefs will be available. Number one, losses on furnished holiday letting can only be carried forward to set up against profit on furnished holiday letting in future years. Losses you can just carry forward. Second, you will be getting capital allowances instead of replacement furniture relief. And we will study capital allowances, inshallah, don't worry. Capital allowances will be available on furniture instead of replacement domestic item relief. Third, income will qualify as relevant earning for pension contribution. The question is, what do you mean by this? Income will qualify for relevant earnings for pension contribution. Point number 3, you will only be understand once you have studied the topic of pension, which comes after property income. Last, capital gain deferral relief. You will be getting rollover relief, gift relief will be available. So obviously now you will be thinking, what about this capital gain deferral relief? So point number 4, you will only be able to understand when you have studied capital gain. So you have to wait for point number 3 and 4 point clarity. So losses from furnished holiday letting can only be set against any other, cannot be set against any other income. They can only be carried forward and set up against profit from the same furnished holiday accommodation. If your furnished holiday accommodation is in UK, then you need to have, if you are having a losses in furnished holiday letting which is in UK, then you have to deduct losses of furnished holiday letting which is in UK. You have to wait for the profit from the same property in UK. UK losses can only be set against future UK furnished holiday income, and if you have, let's say, furnished holiday accommodation in EEA, European Economic Area, then losses can be set up against future EEA furnished holiday accommodation income. So simply, if your accommodation is in UK, if you are having a furnished holiday accommodation in UK, there are losses, then you have to wait for the profit from the same property in UK. If your property is in EEA, then you need to have, if you are having losses in that accommodation, then you have to wait for the profit in furnished holiday accommodation in EEA. So let me discuss the final, I would say, concept of property income. What is that? It is also possible that instead of profit, individual may have losses in property income. If in current tax year, property losses arise, then just write nil, because it is possible in one property one you are having profit, in property two you're having losses, in property three you are having losses. If there's an aggregate loss, then we don't write the negative value, we write 0. Then what do? Carry forward. Simply carry forward business property losses, business property losses, and set off against future business property profit. So if you are having losses in property business, then you need to carry forward those losses, and you need to deduct business property loss against future business property profit. So that was all about property income. I strongly believe, dear student, now you have a really good idea of this property income. Then the next topic is going to be on pension, which will not be a really big topic. So after basically discussing pension topic, we will go for employment income. Okay, and slowly and gradually, maybe after one or maybe two more lectures, we will start Kaplan kit as well, so that you should be having a really good idea of the level of difficulty which you are going to face in exam. Because the more kit we are going to solve, so you will be having more grip on this taxation. So thank you very much. Have a nice day. Thanks a lot.